From the 6th of April, there are some massive changes coming to inheritance tax in the UK and how it works for expats, domiciled people in the UK that have got overseas domicile that are living in the UK, and fundamentally how inheritance tax works on your worldwide assets. It's good news for people that are living overseas, but bad news for long-term residents who have an overseas domicile somewhere else that's not the UK. So stick around to the end to make sure that you understand everything, then you know how to use these new rules to your advantage to potentially save up to 40% in inheritance tax on your worldwide estate. So the first place to start really is to cover what are the current rules that are in place right now. And essentially with inheritance tax in the UK, it's always previously been based on your domicile. So actually, where were you born, where were your parents born, where are your main interests, your habitual abode, everything else. Basically, where do you call home? And that was typically how the UK inheritance tax system worked. So if you were non-domiciled, so you were born overseas but living in the UK, well, broadly, you wouldn't usually be subject to inheritance tax unless you'd been living in the UK for 15 out of the previous 20 years. Then you were basically deemed domicile in the UK then, and then your worldwide assets would be subject to IHT. But there are still some benefits to non-domiciles in that, if you had trusts overseas, they wouldn't usually be caught in with this type of inheritance tax. But actually, now the new rules have completely overhauled this. And in long and short of it, how the new rules work is it's more of a residency-based system. So your domicile now is completely irrelevant in most cases when it comes to UK inheritance tax. And broadly, if you've been UK resident 10 out of the previous 20 tax years, you are now within the net to UK IHT on your worldwide assets. It's worth mentioning that for anybody, even if you're non-UK domiciled, non-UK resident, your UK assets are always subject to UK IHT. If you've got properties in the UK, even if you're domiciled in the UAE, domiciled in Singapore, Monaco, well, actually the UK government are always going to want taxes on your UK citus assets regardless of domicile. But for non-domiciles, well, actually, the UK cannot tax what isn't in that country. So if you've got offshore savings accounts, overseas properties, and you're non-UK domicile under these new rules, well, actually, the taxman in the UK can't charge 40% inheritance tax on those particular assets. For people that have been UK resident for some time, there are some tailing provisions that are going to apply, which basically means you need to be non-resident for a good number of years, depending on how long you've been UK resident for, in order to avoid the UK IHT net. So basically, if you've been resident in the UK for up to 13 years, then actually it's a 3-year trail. So if you become non-resident now, your assets will still be subject or potentially exposed to IHT for up to 3 years, and then that increases for each year you are resident up to 20 years, and at that point there's a 10-year trail. So this is for people that are coming to the UK from other countries. Most people watching this channel, that's not the case. Most people who are UK based and they want to escape the tax man, they're not coming to the UK to pay taxes, they're leaving the UK to save taxes. So really these rules are very good news for people watching this channel, because previously it was all about domicile, as we mentioned. Take myself for instance, I've got a UK domicile. The chances are if I were to die now, well actually I'll be buried in the UK. The UK is still, obviously I live in Dubai, I spend a lot of time in Dubai, but the UK probably is still home for me personally. So as a result, I would definitely have a UK domicile, everything subject to IHT. But with these new non-residency rules, all I've got to do now is be non-resident for 10 tax years. And then as a result, I will not be UK domiciled. I will not be deemed UK domiciled. So it'd actually be only the UK assets in my case and your case as well, because if you're leaving the UK, you've just got to do that 10-year non-residency. And then if you're based somewhere else, such as the UAE with no inheritance tax, you've got minimal UK assets or no UK assets in most cases, well, actually, you've completely avoided the UK inheritance tax in that case. But what you need to do here is make sure that you are leaving the UK for 10 years if you're looking to save inheritance tax, and that's got to be 10 full tax years. And another factor as part of this is if you're basically going under a tiebreaker clause. So if you're deemed resident under the statutory residency test, but you're actually not taxed because you're going after the double tax treaties and basically being non-tax resident somewhere such as the UAE, in that case, you will still count as being resident for the purpose of this test. So you need to make sure that you get your non-residency treatment 100% correct if you're looking to avoid inheritance tax, because with these taxes there's going to be large amounts at stake. So as a result, HMRC will not be letting any cases go easily where they think they can win it. So make sure that if you're looking to actually save the inheritance tax, you fundamentally plan for being non-resident. Make sure that you are non-resident for those 10 tax years and do not accidentally trigger a UK tax residency. So it needs to be 10 full tax years to get this non-residency initially. You can't come back to the UK for any tax years at all and trigger that tax residency. If not, you might inadvertently trigger your domicile for IHT purposes in the UK, and as a result potentially face up to 40% inheritance tax on your worldwide assets. And this flows in nicely because, take for instance, if you're relocating to Dubai, well, the golden visa in Dubai is 10 years. So it's pretty easy to set this up and for you to fully up sticks, relocate somewhere else, achieve that lower tax lifestyle, which everybody watching this channel is after. No income tax, no capital gains tax, no inheritance tax. Find somewhere that works for you and remove yourself from the tax net. So overall, this change in legislation it's bad news for people that are domiciled but living in the UK. That's going to be quite damaging to the UK economy because those guys fundamentally paid a lot of tax coming here. Whereas we've seen this week some of the wealthiest billionaires leaving because of these rules. But for people that are leaving the UK, that have previously been UK-based, UK-domiciled, formerly domiciled residents, the technical term is, this is good news for people in that camp because it really is just a case of now it's residency-based, working out the criteria for becoming non-resident, ticking that box for 10 years, and then you've escaped the UK IHT net. Hope you found this video useful, guys. Please do remember to give it a thumbs up and smash that subscribe button. See you next week.